Okay, good morning everyone. Let's get right into the stock market technical analysis. If you're new to the channel, this channel is all about charts and trade ideas. We really try to use the charts to be our guide. I'll give you guys an idea of where I think the market's heading and kind of my opinion, and I oftentimes will build a technical case based on that opinion. I build a technical case to define what that opinion is. So thank you for joining along, and also check out my stock market technical analysis course. This course is the strategies and tools that I use to find trade ideas. It ultimately, at the end of the day, is what I use to help guide me into where I think markets are going. So if you've been with me for this year at least, we've caught this entire short trade. We caught the bounce right here in March and re-shorted it right there. Everything was based off the technicals, and I teach all of that in my course. I priced it affordable for everyone, so it should not be, that shouldn't be a barrier. If you just aren't interested, fine, but the price really shouldn't be a barrier. Check that out, link in the description below. And let's get right into it, guys. Triple Qs, we're at a battleground right now, and basically, if we look at the hourly from this morning, you can see the first hour they dipped down. We've got this wedge, the bearish rising wedge pattern that we've been kind of holding on to. We overshot it after the Fed, but it came right back down. So at the end of the day, there's just a couple things that I really need to focus on in order to determine where this triple Qs goes. Now we've got support, we've got decent support, and it's right down here at 298. All right, right there, 300, 298. I'm going to call it 298 now because we're close enough now. If you go to the daily chart and we roll out, you can see that that back here, big support or big resistance back here in 2020, and it was support. All right, so I think we dipped down. We probably end the day, if I had to guess, I think we're going to head down there and hit it. But there's one chart that I really you have to focus on today, and that's Apple. Look at the FANG stocks. They're all down right now. Facebook, not much, but Facebook's already been sold off a ton. But they're all pretty weak except for Apple. This is the battleground that we're dealing with right now. So they are trying to break Apple, and the bulls are trying to hold it. You look at the hourly, the first hour of the day dipped below the trend line, bounced up and recovered. They're basically bouncing between the 200 and the and then that trend line. Going to the daily chart, you can see it right here. So on the daily, this is your big support going back to September of 2020. You can see, if you see all the tags of support here. If you can't replicate this, again, guys, use log scaling. Come down here, bottom right corner, see that log right there? Log scaling, very important for charting. All right, and if you're going to use technical analysis, you need to understand log scaling. It's kind of key. Again, all this is in my course. Now, there it is. There's your support. We need to see this break right here. Nice impulsive breakdown. So far, they haven't been able to do it this morning, so we'll see what comes of today. But you need to see that break. If they can't break this trend line, then Qs isn't going to go down much more. We might run down and hit that 298. It is possible that we run down, hit the 298, Apple kind of chops around while still kind of holding this trend line. Maybe we hit our profit target in triple Qs, but we're not going to see the market go too much lower until Apple breaks. So watch that. That's probably my highest focus for today, is this Apple chart. Okay, the SPY. If you look at the hourly chart on the SPY, we had some lows here at about 410.77. And that's kind of the recent trading area. That must show up on the daily. Yeah, right there. So you see that's your spike down there and a couple reactions on the daily. So it really only matters what happens on the daily chart for this. So we'll see on the daily to see if we can break below that 411. We've got support on the SPY down here at about 400. So again, maybe we get a dip down and hit that, but again, just focusing on Apple is the key. Going back though, it's always important when really trying to anticipate where markets are going, using the technicals, to take a step back on the larger time frames. I do it all the time. Throughout the day, I'm always going back and looking at different time frames, but I always go back to the larger time frames like the weekly. I don't use the monthly too often, but the weekly. And the daily is my main timeline. That's the most important to me, but the weekly is good to understand. Going back to the weekly chart on the SPY, this is your bull market coming off the 2009 lows. So see this bull market? See how we're just going along here, in a nice bull channel for many years. That's your bull market. And the weekly, you can see all the tags of support, all right? We broke support in 2018. The reason why it was able to rally from here is the Fed. The Fed stepped in and started reducing interest rates and pumping stimulus. Okay, we had a rally all the way up to the resistance point, and then the market all of a sudden cared about COVID. It was technically based. COVID was a catalyst, but we had technicals to give us a short idea. So we shorted that, caught the COVID crash. That gave back many years worth of gains in a period of weeks. Then the Fed stepped in and did more money pumping. Now they were able to recover the trend line in 2021. All right, so you can see. And once it was recovered, it held each week as it hit that trend line. The buyer stepped in. Okay, but big sell signal right here. All right, on the beginning of this year, 2022, we got the sell signal saying, okay, this rally's done unless the Fed, this bull market's finished unless the Fed wants to try to save it again. All right, and so far we are downtrending. We've got a high and we've got a lower high. We've got lows, lower lows, downtrend. All right, that tells me bear market. Now, obviously, the Fed might step in, and we never know what they're going to do. But I think there's probably more pain just looking at this larger time frame, unless the Fed just had an opportunity to try to step in. So I think the Fed's willing to have a lot more pain, probably getting us all the way down here on the SPY at about 330, 340, 339. That's your pre-COVID highs right here. So maybe they want to pull back enough out of the market to put us back to where we were at before COVID hit. All right. I like that as a target, as kind of a near-term target, at least for the SPY. And you never know how much further down it could go, but I like that one for now. And if you go back to the Qs ran so much farther than the SPY. There's the Qs target right there, and that is about 238.50, 239, give or take. That would be your pre-COVID highs. So I like that one as well. Whether, I think we could probably get a bounce here at this 298, maybe a bear market rally. But I think we are going to probably continue to want to sell the rip and let this thing head down to probably what seems to be the final target, at least for right now, which is the pre-COVID highs right there. Okay, small caps, IWM, big horizontal topping pattern on the weekly chart, sell signal back here beginning of January, couple weeks of back testing, and we're rolling over. Okay, so if you just go back and look at the weekly, you see what's going on here. We are, we went sideways and now we're selling off. So as far as I can tell, starting a bear market in, across the board. This one from high to lows is down 25%, so that's an official bear market. But we don't have that official bear market in the S&P 500. I think that's coming. So going to the daily chart on IWM, we've got support down here at 170-ish, 168, somewhere right in there. Now that's your pre-COVID highs in this one. So the IWM has already sold off a decent chunk. I think we've got another, I don't know, it's probably about 10% or so. I guess 5 to 7% more, and then we'll probably get some decent support down here. So that's my support zone. We still have bullish divergences across the board on the daily charts. So look at the PPO here. There it is, still have it. Now we're pointed down. See how we're pointed down right here? If we continue to go down, we could take out the divergences, but as of right now, we still have it. So maybe this situation is going to play out where we dip down, hit these support targets that I've been talking about for weeks, if not months, and keep the divergences, and then we get a big, strong bear market rally out of that. All right, so that is a possibility, but I think we got a little more downside to play out over the next week or so. Again, you got to zero in on this Apple chart, all right? That's going to be key for us to get those breakdowns. We need to see Apple break. Okay, some short trade ideas that I've talked about. We'll go through a couple of those. Tesla. All right, so Tesla, if you look at the daily, we're just kind of chopping around right here. I think once the bottom falls out, you know, if you see Apple break, Tesla will likely break at the same time. But down here, all right, 780, next level of support, probably get a bounce there. All right, so I don't see anything telling me that we're not going to head down there. We don't really have bullish divergence either. So that's the thing. If I zero out and look, you've got some bullish momentum right here. All right, and it's on the PPO as well. But then you also have, you know, you have kind of bullish price action. So no divergence, telling me I think we're going to head lower. Maybe make a new lower low and have a bullish divergence, but just in general, I think we're going lower. All right, so there's some levels to watch. GME, this one's just kind of hanging in there. This one is probably going to just hang in there until it's just obvious. You've got retail traders pretty much in here, so they are not going to. They're momentum traders, so they will just sell when the momentum picks up, and until then, they'll just probably hang tough. So you'll see most likely some sort of a pretty impulsive move, and then that selling will just increase, you know, pretty impulsively. So you're not going to have a lot of people front running the move or reading the technicals saying, okay, I think it's going lower. They will just react after the selling starts. That's what I see happening on this one. Look at Amazon here. All right, look at the weekly chart. This is one of the big cap tech stocks. Here's your bull market going back to 2008, okay? So to say that Apple's not going to break, I think is low probability. I think Apple will break. It's just kind of the last holdout. Look, here's your bull market, and on the weekly, all right, we got a sell signal. I marked it out. I got the line on it right there. But there's your sell signal beginning of January. Couple weeks of back testing, and finally she gave it up, and it's obvious to all we are in a bear market. All right, so bull trend in Amazon, now starting a downtrend. So all rips in Amazon should be sold into, at least from my perspective. I think we're heading down to this level of support, which is about 2050. Good support there. You're most likely going to get a multi-week, maybe a multi-month bear market rally down there. Okay, something like that. Probably going to rally. We could even rally all the way back up to this 29-30 area, but good support there. So you should probably get that rally. Now, again, you don't want to stay too long to the party in bear market rallies. They are tradable, and we will look to take some of these, and we'll use the technicals to tell us when it's likely time to get out. But yeah, that's what I'm looking at on Amazon. So more downside. Moving on. TSM continuing down. All right, nothing today really because we're in this battle, but we're just continuing down. All right, next level of support on this one is 76.75, and we should head a lot lower. I've got another level here at 60.50. All right, two levels to watch. Probably going to get a bounce of that first one, but that's all I see. UPS again. All right, my blue line here is just marking out my bear flag. All right, my target right there, and you can see, look what the candles behind it are doing. They're just pretty much behaving exactly like my blue line was marked out at. So again, I don't see any support till you get down to 156. You got some support here on the daily chart. Oh, sorry, this is a weekly. Let's go to the daily here. And yeah, right down there. So there's our near-term target. Maybe step in a little early. Whenever you approach a target, you always want to probably cover a short a little bit early in case, you know, this level is very obvious. So it'll probably reverse early of that target. Okay, so, but from now, you know, I still think we're heading lower until we get down there. UMP. All right, look, starting to crack the support. Cracked it this morning, but they recovered it. 228.87. That's my level of support. So you can see that was resistance through here, and it is support now. All right, so we need to see that go. Once that breaks, we should head down to the next level, which is 215, and that's also the bear flag target. So I think we're going to head, you know, I think it's high probability we get there. Alcoa, AA, all right. So my blue line here is just marking out my bear flag target, which if I go ahead and just get rid of those, that's down here. at 52.38. We also have the 200-day. This one actually is coming close to tagging the 200-day, which is at 59. So the bear flag is marking us down here at 52.40, 50 area. And then we also got that 200-day minor support here. So there's kind of a wall of support in this area. So we'll look to probably cover this short trade as we dip into this area. Maybe we get a little break of the 200 and then a whipsaw recovery. Again, this is part of the inflation trade, which I think will continue and persist. We're seeing a little bit of temporary deflation right now, so some of the inflation trade's coming off. But I don't think it's going to last. So I think what happens is we're going to get, this kind of drop that we've seen in some of the inflation trade, and then the market's going to hold up and continue to rally. So it's going to force the Fed to continue to either hike or, do something. All right, new trade idea that I pointed out yesterday, SeaWorld down 1.5%, holding the 200-day, which makes sense. There it is. All right, we need to see that go. All right, the 200-day is sitting there pretty much 61.50-ish, You see that start to go, start getting hourly closes below that level, and that's going to signal that this near-term support is gone. Now, we have a big sell signal. All right, you've got the bearish rising wedge pattern here, and then you have a trend line to watch, which is right down here. You can see the tags of support that we have marked out. This is kind of one here. There's one. And we had a sell signal yesterday, which was a break of support. So you broke the trend line, but the 200's right there. So this is where they're going to try to hold it. Once that goes, there's really no support, and this should start to just roll over. The projection on this, if you take the widest part of the wedge, it's kind of projecting us to run down, slightly below this 57.90 area. So somewhere, right in there, maybe slightly below, down to 55.50 or so would be the projection. Okay, but again, that's likely going to be just the area where maybe you get a bounce from. You probably hit that, bounce up to the 200, get rejected at that point at the 200, and move lower. So it'll be a sell to rip thing. So we'll probably run down here, hit something like that, bounce up to the 200. We reshort it here at the 200, and down we go. All right, and we'll just continue to downtrend until we see signs of a bottoming pattern. Okay, and this one I left a comment yesterday, PANW. We have a sell signal here as well. So this one is a software company. So it's actually it's been very strong. It's very similar to Apple, I guess, in terms of holding strength, but it should break. And we did get a sell signal yesterday. So here is support on the daily. All right, and this support has been just riding the 200. Now the 200 started to drift a little lower. But look at all the tags of support. Okay, support. There's, they stepped in early there, but there's another tag. We finally got the sell signal yesterday. See that break? All right, that was pretty impulsive. The selling yesterday was impulsive across the market, and this broke on yesterday's price action. Today, they dip below the 200, but they're stepping in at the 200. So again, that makes sense. So here's how I'm looking to trade this. As long as this can hold below this trend line right here, we don't recover this trend line, I'll remain short. You could probably even add, I think if it takes a couple days and then maybe does a back test, that's going to be an objective area to add to the short, okay? And then with a stop just slightly above. Got to give it a little bit of room because they might try to do a little whippy thing above and then fail, but it shouldn't really hold too much above that trend line. As long as we can hold, that level, down she goes, all right? And this should head down and probably fill this gap down here at 374.90. I would say would be a good target for this one before you get some sort of substantial rally. Two levels to watch, gap entry and gap fill, all right? Gap entry 421, maybe you get a bounce there. Gap entry 375.80, probably get a bear market rally there. Okay, so that's how I'm trading it. I am short this one right now. Qualcomm. All right, Qualcomm, what I'm watching is this downtrend line right here on the daily chart. Okay, so you can mark that out. and we just recently had another reaction. We do have bullish divergence, all right? So it is intact. See that right there? And it's basically right there on both momentum indicators. So this was a divergent low. So if we get a breakout of this downtrend line, that's going to be a buy signal, and we'll probably want to exit the trade. Now on Wednesday, you did get a breakout right here on the Fed. So it was a breakout, but the very next day instantly faded and proved to be a false breakout. So that is bearish to have that false breakout / bull trap. And that tells me that we're probably not going to get another breakout, that we will likely head lower and take out the divergences. This one will move with Apple most likely and the triple Qs, but if we get a rejection and we start to head lower and Apple starts to break its support, we should head down to this level here, 123, 123.20. Good support there. I see some decent, look at all the reactions. 1, 2, 3, 4. There's another 5, 6. I didn't circle that one. 6 reactions. So very good support down there. That's where I think we're heading in the near term. Someone asked me to cover this one. This is new core. All right. So we had the sell signal on the daily chart. There's your sell signal right there, April 25th. Okay, little consolidation, breaking trends, constantly breaking trends and heading lower. We're right in between the support and resistance right now. So resistance is about 144.80 and support is down here at 126.40, and you got the 200-day right below. So here's how I think it's going to go. Probably consolidate here, maybe bounce a little, hit resistance, run down, hit our support, and the 200 will probably creep up. We'll probably come and hit both of those at the same time. I'd expect a bounce down there. All right, so 126.35, 126.50, somewhere right in there. You should get a bounce. Okay, that's what I see on that one. Gold. Okay, so gold is kind of just hanging in there. It looks like it's bear flagging a little bit, something like this. Now this, grab the right tool, guys. You've got a flag, and we're kind of flagging out, but again, this would project us breaking our bull market trend line. So I don't know if that's going to play out. Maybe, maybe not. Again, we've got bullish support. Here's your bull market going back to 2018. I got all the little support tags circled, and so I think we're heading down there. The 200 days right down there, 1840-ish. Maybe we get a little dip down, hit that. That should be support, and as long as that holds, that's the buy zone, okay? So you can buy there with a stop slightly below, and that's it. That's all I see on gold is, maybe a little more downside. Now, these gold miners, let's go to GDXJ because this is the one I've really been pointing out. Look, they're continuing to just build on this trend line. So you can see this. We keep kind of slicing down, hitting it, grinding out new lows, and this is exactly what I talked about over the last couple of days. I said I think we're going to grind around, making slightly new lows, but when we do that, we're going to keep the bullish divergence. See the hourly chart here? See how the momentum's moving up while price is kind of popping down, grinding, popping lower, momentum's moving higher. This is a bottoming pattern basically, and this is bullish divergence. So you can buy here at support and for a bounce. I think we get it. All right, I think this is a buying opportunity in the miners. All right, that's what I see. Now you can't analyze the miners without the dollar, and we need to look at the dollar. The DXY looks like it's topping out right in here. It doesn't have to be though. All right, but you've got we're kind of consolidating here. If I go to the hourly, you can see that the high yesterday was a divergent high. We're starting to put in negative divergence. This little pop right here was a divergent high. All right, right there. So we'll see. We'll see if we can continue to... Oh, and I apologize. This is also divergence here. All right, so exactly. We've got negative divergence. This little high that we just made was a divergent high. I think we're going to roll over and fail here. And if I go to the weekly chart on the DXY, this is big resistance. This is going back to 2016. You can see resistance, resistance, and resistance. We're just over it right now, but the week's not over. We might see this thing sell down today. We've got a triple top basically potential. All right, so if the dollar starts to sell off, gold should rally. And that's how the setup is that's what the charts are telling me is going to happen. DVN, I know I've talked about this one. We're starting to kind of hold this trend line right here the last couple days. I'm seeing relative strength here. And, I let some of this thing go the other day. I just kind of cut it and look to probably get back into it if I get another sell signal. We have big negative divergence. All right, there it is. This new high over the last couple of days is a new divergent high, but it's not a sell signal. It doesn't tell us that we're going to roll over. So what I need to see as I roll out, if my trend line behaves, is this lower trend line right here on the daily. I need to see that break again. All right, I need to see an impulsive break of that trend line with selling to want to re-short this thing. So that's kind of what I got on that one. It's not working out so far, but they don't all work out. I'm not going to be 100% accurate. It's all about having good accuracy, but then also managing risk versus reward. And that's what I teach in my course. So check that out, guys. That's one of the training videos. KHC, I don't know. It looks like it's kind of grinding higher. This one I think is going to go on to fill the gap. I really do. Gap right here at 38. That gap comes back from 2019 area. I think what's going to happen, we're going to recover this trend line and pop up and fill the gap. All right, so that's what I got on that one. And it'll probably do it with a divergent high. So you can see we have a really high here. So if you run up quickly and hit that gap fill, it'll be negative divergence. That'll be your sell signal, and I wouldn't wait for the exact gap fill. It's a very, very obvious gap, so you're probably going to want to step in a little early. Two things. When a gap is very obvious, and this one's very obvious, this big, huge gap, you're either going to fall short of the gap or you're going to overshoot it. All right, so maybe you could just set a trailing stop. That's one way to do it. Set a trailing stop. If it overshoots it, great. You just keep bumping your stop up. Finally, it'll probably come in and clip your stop. That's one way to trade it, and not a bad way to do it, really. Okay, the financials, and I'm going to look at the weekly chart here because I want to point out the bigger picture stuff. Financials bull market really the trend started in about 2011. So this is your Great Recession plunge, and this was a financial induced recession or crash, so that's why these things fell so much. But this is the trend. So 2011 on the weekly, and you can see I had a tag of support here. There's a tag. There's a tag. There's a tag. Now this is your COVID drop. The Fed was able to recover it, but look, even in COVID, it ran right up to this trend line and got rejected, and we had some more corrective action after getting rejected. So it's a very valid trend line, I think. We had another tag of it there, and look at where we're at right now. We are at support on the trend line in the financials. Okay, sitting there at support. Now, it would make sense that we get a bounce here, but the thing that I want to highlight is look at the big negative divergence on this weekly chart here. All right, so the momentum has just been completely dropping off. So each one of these new highs, this was a high, this was a high, these are all divergent highs. The financials were moving higher while building big weekly negative divergence. So now we've come down to our trend line. Is that enough to satisfy the divergence, or are we going to break the trend line? I don't know, but what I would say is if we get a weekly break, this is a weekly chart, so you need to see a weekly candle, but if you get a weekly candle break of the trend line, then again, that's just another nail in the coffin telling me that we're entering a bear market, or we'll be in a bear market across the board very soon. And this will, likely, the SPY will likely sell off as well as this thing. So things to watch there. We are at weekly support. Do we break? Do we not break? If we break, most likely heading into a bear market. And I would target the pre-COVID highs right here, at least initially. Let me kind of move this up. It's basically right here. And you probably get a bounce there. 31, 34, maybe bounce up, hit the trend line again. All right, moving on. Okay, we'll wrap up with bonds here, TLT. So this is a very key thing we need to be watching. Again, the bonds right now are in play for a major shift, and it's a shift that basically is going to be the largest shift in pretty much everyone alive's lifetime in terms of the market. The reason being is if I go to the interest rate chart, you'll see here, this is TNX. And if I go and look at a weekly chart, basically we have this price channel. This is 1981. This is basically every single recession, every single time there's been stock market weakness, going back to Alan Greenspan, who was the Fed chair back then. They have had ammunition to support the markets. All right, and that's what the Fed's been doing for 40 years, is supporting the stock markets. So most financial advisors will tell you the market always goes up. Over the long term, you'll be great. You get, on average, it returns 7%. They're basically, if you look at those charts that they put in front of you, they'll usually, most of the time, have a date range saying something like, since 1981 markets have returned, or since they find a time frame. They kind of cherry pick a time frame. In the last 50 years, the market has returned 7%. So it makes you feel like, well, that's how it always is, because that's my entire life. So that's how it has to be. That's a fallacy. Just because something's been some way your entire life doesn't mean that's how it always is. So point is that every single time since 81, you're dropping rates. This is the interest rates. So you've got, here's your Great Recession. They cut rates a bunch. COVID, they went crazy and lots of that. So the point is, as I zoom in, look at where we're at right now. All right. This is a weekly chart and the week's not finished, but we are popping above this major 40-year long trend. All right. If we continue higher here and start to break out, it's just signaling a complete shift in the dynamic of the financial markets. All right. So that means higher interest rates, asset prices that have been propped up for over 40 years should continue to come off. And I don't see them just correcting. And this is, again, you have to take a step back, remove yourself from what has happened in your life. Depending on how old you are. But it doesn't mean that markets are going to just correct and then they will, bottom out and then recover and go on to make all-time new highs. Okay, markets could correct, or we could go into a bear market, and the prices might not ever come back for the rest of our life, or it depends on how old you are, or they might stay depressed for 20 years, like they did in the Great Depression. Prices might stay depressed for 15 years, 30 years. We don't know. All right. All I know is each time the markets have corrected over the last 40 years, they've been propped up by the Fed. The Fed has massive inflation to deal with and pretty much zero interest rates. All right. Yeah, we're raising interest rates. We don't have any interest rates to support the market, and we can't really do any money printing unless we want to just, have runaway inflation, basically. So the point is that if markets are going to correct without that artificial stimulus, artificial force of the Fed, then you might see a real correction, which might be a 20, 30 year prices staying way down. So just keep that in mind in the back of your head. That's important. I'm looking at TLT here. You can see we're continuing to sell off. This is bad for tech. Tech should break. All right. Apple should break. All right. Apple's price where it's at it's just a last battle. But Apple right now is priced for, interest rates that are way up here. All right. But interest rates are pretty much collapsing. And that's why, if you have a growth fund, I know a lot of 401ks are in growth funds. They're getting hit on both ends. They're getting hit on the bond end. Your bonds are selling off massively, and so are the stocks. So we gotta, you gotta protect yourself. There's a potential big shift happening right now. We can't say for sure yet, but I'm just showing you what I see in the charts. Now, we got, maybe gold will be the safety. It's obviously not bonds yet, so we gotta see. But more selling today, going to the daily chart, down another %. All right, so that's all I got, guys. Long video. Just wanted to go through all the different trades as well as the the longer term charts, give you guys an idea of what I'm thinking. Drop me a thumbs up on your way out. If you're new, check out the course, link in the description below, and I will catch you guys on the next.